Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. So we've already seen the private sector and the private banking sector break these rules because they are private. That will be easier for them to get to now that it can be programmed. They might not let you have your money or even take it away. This has already happened when the FBI and the Secret Service joined Tether. Because the US government told them to, they've put dozens of names on a blacklist. People will not give up that power. As a tool, it's too important. On the one hand, they are pushing this as a way to give authority through money. It's with great pride that I say Mark Goodwin is the editor-in-chief of Bitcoin magazine, the best source of Bitcoin news. He and the well-known investigative reporter Whitney Webb wrote a piece this year called Unmasking Farmington FTX Fluent Finance in the Coming Digital Dollar. It was one of the smallest rural banks in the US. That got caught up in the FTX alum research crash scandal at the end of 2022. Because the incident was so big for such a small bank in the middle of nowhere, reporters like Mark and Whitney wondered why LM Research put $1.5 million into the bank right before it failed. It was less than half of Alum's investments that Farmington had at the time. Farmington was a rural Washington community bank with only one branch until it was bought by FBH Corporation in 2020. FBH Corporation was started that same year by John Chopin, who was the CEO and head of Deltec Bank and Trust in the Bahamas. It looked like Chopin's only goal was to buy the rural bank. When the company was bought, it got a whole new name and started offering services only online. Whitney and Mark say that Chalapan Deltec is connected to Tether, a company that provides USDT stablecoins and easy money transfers. A business that not many people have heard of but has been building strong relationships with governments in the Middle East and wants to be a key part of the new digital currency movement led by central banks. Mark talks about an even bigger scandal in a new movie on the Big Picture with James Patrick YouTube channel. Issued digital currencies by the government because people are afraid that it will make it easier to spy on people and put them on blacklists. Also, the fact that digital money can be programmed means that it can be used against people by a big, bad, evil government. This is true, but capital creation has never really been a public sector job. It hasn't been a move in the public sector in a long time. The business sector has really taken over. In order for that to work, the government issues stocks and sells bonds to private banks. The banks then use the bonds as collateral for the debt they buy from the government, which is what turns the bonds into dollars in your bank account. There has been a digital dollar for a very long time. There are decades of digital copies of it. So we have this big fear that has been mostly faked about digital cash that the government issues directly. And that makes us all very scared. But what's really going on, much more than CBDC being issued, is that the private sector is entering the market and continuing the game of private capital creation by buying these bonds and making these things called debt tokens. That's what stablecoins are. They are digital debts that have a dollar value. We are going to keep seeing that the private sector really does help the government. As an example of what they're going to do, we can look at COVID, where private companies were used to silence certain views and ideas and keep certain topics of conversation from being talked about in COVID. In contrast, if these were public spaces that the government had to protect for its citizens, they would not be able to limit people as much. People can still speak out against these kinds of private companies that get a lot of money from the government, like Google and Twitter. Similarly, they will do the same thing with the banking business. They will be private, but only in name, and have strong ties to these private fintech companies that are creating stable coins. We've already seen that. The FBI and the Secret Service have already joined Tether's blockchain. At the same time, they are buying $100 billion worth of government debt. And just so you know, these fintech companies are one of the fastest growing groups buying government debt. I believe that the CBDC issue will mainly serve as a distraction. And the strategy of creating private funds will keep going. Government bonds worth $100 billion were bought by Tether, its companies, and the people who own them, such as Cantor Fitzgerald, Dell Tech, and these banking partners. One of the fastest growing places to buy government debt is there. Of all the independent nations that buy debt, they would be in the top 20. They only owe us 1/10 of what China and Japan do, which is all well and good. They're almost $1 trillion. There are about 100 billion of them. That means one company owes 1/10 of what the US owes China and Japan, because people in the US don't like cryptocurrency. Mark and Whitney have come to the conclusion that the Federal Reserve will try to change people's minds by saying that the government will not be in charge of the digital dollar. When asked in March if the central bank had any plans to make a cryptocurrency, Fed Chair Jerome Powell said something similar. Their story came out in January. Powell said, "We're not even close to telling people to use or adopt a central bank digital currency in any form." If that was a government account, the government would be able to see everything you do with it. That's not something we would do, support here in the United States. We would use the banking system to do this if we ever had to. That's how scared Mark and Whitney were that the central bank, which is partly responsible to the people, wouldn't be in charge. People might not be able to do what they want with their money or their information because of the feared banking group. Plus, people are worried about digital IDs, a global carbon credit system, and other bad plans by the world's richest people. We need to talk about it once more. The best way to get the U.S. government's debt spread around the world. They're painting a very smart and evil picture of how Argentina's currency is the problem and how inflation has destroyed the country. It's their bad fiat currency, bad government, and bad monetary strategy. That's why we're doing them a big favor by giving them access to U.S. dollar accounts, which are basically bank accounts. People who don't have bank accounts are being banked, but really you're charging the global self to use your bank account. A lot of the time, these are things like foreign banks and economies. Some of them are now being controlled more by the DOJ, the SEC, the CFTC, and the Fed Treasury. But, these have mostly been foreign banks in the past. Yes, the dollar will be used a lot, and more countries will depend on it. We're seeing that, in South America, where it's being controlled, and in the global South in general, and in some parts of Asia, where stable coin and dollar use is going through the roof, and it's being sold as a charity effort, but it's really just paying off debts. Now we have private companies making the technology that these banks need to settle stocks between each other. We saw the same thing with FedNow, which was launched in the US last year. The only thing that changed was the Treasury deal in the United States. In no way was it a CBDC. There was no creation of a coin. There isn't an offering for stores. There's not a single account. To be honest, it was just updated lines for banks in the Federal Reserve System to settle treasuries. That's always the case. That's what will happen. We're only going to see a new version of it that makes settlement easier and the ability to audit because, the big problem with the US dollar system is that it's not clear how it works. In other words, it's the hiding of where this security and these assets really are that causes them to get lost. When trillions of dollars go missing for no clear reason, bad things seem to happen. So they're going to digitize it and set up a two-tier system so that they can use these deposit tokens to make money on top of it. They can also fractionalize these tokens so that they can be used and cut up, and they can play the debt games they love to play, like when Larry Fink created the CMO and watched the CBO explode in 2008. That will keep happening, and the two-tier plan will make it possible for it to happen much faster than ever before. Anyone who prints gets to make the debt that they sell to people. It's the same people. They want to keep this plan in place, but they only want to do it in a way that makes it better. You should know that steady coins like dollars are debt. They are tools of debt. As you said, this whole system is based on debt. That's why they want to turn debt into digital money. And the only way to do that is to have it linked to some kind of collateral, some kind of object that you can use to build credit on top of. I don't think it's a surprise that everyone is working hard to figure out how to digitize debt. In what way can we digitize payment tokens? How do we make assets